welcome to this discussion around the future of finance in the era of AI, and thank you to Dwight, Geraldine and Kevin for being on the panel today. We'll dive straight in with a couple of questions, and as you said, please do add some questions from the audience as well at the end. So today we've got a mixture of some digital challenger banks, some incumbent banks, all on your own respective journeys in AI. As we look ahead to that future adoption, what are some of the biggest challenges that you're anticipating in really getting the most out of the AI technology? And maybe, Dwight, we might start with you.
Thank you. Thank you for having me here. So I will talk about a couple of challenges, and maybe I will bucket the challenges into two categories. Number one will be the technical challenges, and number two will be the business or cultural challenges. So coming to technical challenges, this is something that is relatively well understood. The challenges are for talent. We know there are a limited number of people who can work on this. There's the challenge of costs, and increasingly we are getting better awareness of what are the costs of the decisions you make, whether you fine-tune your models, whether you write your own models, and what type of impact this will have in the future. Or the challenge of data security, and the decisions you make today, how do you protect your data? And finally, the challenge of governance, how do you make sure that you're governing all of this? So I will put all of this together as what we call technical challenges. But for me, what has been eye-opening over the last 1 year has been that the technical challenges are something that you can address. The business and the cultural challenges are something which are much bigger. And what I mean by that is that, fortunately or unfortunately, now everyone is an AI expert. And hence you have called me here where I know nothing about AI. So as a result, there is this expectation that you must do something on AI. This expectation is externally from investors, externally from stakeholders. It's also internally that every team is coming out with different use cases. And herein lies the challenge that what do you work on? And here I find that possibly we're at the peak right now of what that Gartner hype cycle goes, right? And possibly we are already on the way down. So here, what we have found very useful is to use the value prism, where you use the one axis you have value, where you go from high to low, and the other axis you have feasibility, where you go from high to low. And you soon find out that most use cases people are working on are falling in the low value but high feasibility use cases. They're easy to do, but why are you doing it? So increasingly, we are being very, very diligent and very, very disciplined in first ascertaining what is the value. Are you addressing a problem which is of high value, medium value, or low value? And then talk about feasibility, where you talk about technical feasibility, but you also talk about the business feasibility. Is your business ready to consume this AI output? And the governance feasibility, that do you have the governance around it? Do you know how to handle biases? Do you know how to handle hallucination? Only when you have addressed it, then you work on this. And to us, this has been very, 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 very powerful. So we are working on multiple use cases on personalization, on marketing, on credit and fraud. And for all of these, we are ranking them in this order, which is really allowing us to allocate our resources much better, but also to scale our pilots. Because otherwise, you get into the scenario where you have a number of pilots running for no reason. So this gives you a room towards knowing what we were doing, and also a path towards actually productionizing them. Thank you.
That makes sense. And Geraldine, from GXS's perspective, do you identify with some of that? Is it a different set of challenges?
So I want to double click on that value prism. You've got two-dimensional, but the third dimensional is the risk dimension as well. So I think you would have also considered that. But coming from a practitioner point of view, I like to touch upon two perspectives. One from a data perspective, and then the other one from a human people perspective. So data perspective, I think it's going to be challenging for many, maybe the new banks not so much, but the older banks with lots and lots of data, they are increasingly finding it hard to find all the data that they've access to, the quality of the data, the metadata. Where are they finding all of this? Is it good enough to be used to fine-tune the models, to pre-train the models? I think this is something that it's going to probably should have a more highlight on those issues as well. I think the other difference is that the challenges that we face today in Gen AI is no different to 10 years ago when we were looking at traditional AI or data science as well. The only difference is that now we have an easy access to AI. Everyone's given that tool, that shiny box, that shiny toy. But is anyone governing the use of how this shiny toy with the easy access is given to many people around the organization? So I think it's a lot about how privacy of information, the guardrails involved, how employees are using Gen AI with such tools. I think all of us needs to come out with, internally the organization needs to come up with some guardrails on how they are accessing these tools, what information they're putting in there, what tiering of the information they're putting in there as well, how they're accessing these tools. I think the third point on the data perspective is the quality of the output. How are we evaluating the correctness of this output? Previously, it was all very structured. It was all quantitative in nature. Today, it's qualitative in nature. You have text, images, voice, etc. How do we then see if this is accurate as well? What are the frameworks involved? Do we have a consistent set of standards that ensure that there is such quality of outputs being used? And I do believe and I do see that there's a lot of human in the loop in this validation of the quality of the output as well. And then we come to talent. Like you said, everyone is a Gen AI expert, but no one's the expert, etc. I think it's also involved on the perspective of cultural view, and this is nuances across different organizations, how processes are being constructed, how can we embed Gen AI within each of the processes. It's almost like we need to create a role to be able to bring everyone together along with us in individual teams as well, by knowing where all the challenges are and knowing where to input some of these Gen AI tools to help them be more efficient and be more productive.
Now, Terry, you've recently had some successes in AI. Is it a different set of challenges for you being a
No, I think the challenges are all very well described here, so I shan't add on to it. But I might frame it this way, that I think the decision making ahead of us is a lot about commercialization, right? We spoke about scale, right? There's so many different ideas, different use cases that we can do, but at what scale are we able to implement this that brings the commercial payback, right? So it's actually proven, it can work, but if you only have a very little success in the form of a sandbox we're doing with a small number of customers, it's not going to be worth the while. So I think the biggest challenge for us, in many parts of Southeast Asia where our markets are not very large, we don't have hundreds of millions of customers generally to deal with. It's really about finding that right prioritization and knowing where to put your resources, which are very thin, right? And make sure that you get good payback from all these investments in AI.
That makes sense, and I think we see a huge amount of debate at the moment around what are those priority use cases, and the industry's seen some of them now, particularly in the sort of fraud, collections and scams area, start to be rolled out. Looking ahead to the future, what are some of those use cases that you're most excited about that perhaps we haven't yet seen, or perhaps in that prioritization and development stage? Dwight, I might go over to you.
Thank you. So if we look at AI now, largely speaking, there are 4 areas that we want to work on, or everybody wants to work on. Number 1 is how do you increase revenue? Number 2 is how do you get more efficient? Number 3 is how do you manage your risk down? And number 4 is all the non-financial areas. Now, unfortunately, most of the benefits that we have seen so far has been in the efficiency area. Now, in some way, those are easy to do, and also in some way, they are very easily achievable as well. The feasibility is very high. So for us, the real next step is how do you grow into the area of growing revenue, which has relatively been more difficult. It has been more difficult because it requires a lot more work. Feasibility is not very high, but the price at the end of it is very, very high. One example I have there is, of course, hyper-personalization. And banks in general have been poor in personalizing for 2 reasons. Number 1, legacy banks have not been able to use data as well as they should. But number 2, more importantly, you never had a full view of the client. You only had the view of what the client is doing with you. Now, we are an ecosystem bank. NTUC is a part of us, and we get a lot of data from what the client does with us, but also externally. Now the power, if we can combine these two data together and actually create a real view of the client, then you can truly personalize. And true personalization does not mean selling the next product to him or her, but it also means in terms of the experience, in terms of really helping him or her with recommendations that make a difference to their lives. So that was the first area where we feel very excited about. The second area is on risk management. I think fraud has been a huge challenge for the industry. Now, fraud is nothing new. Banking has been using AI and ML, machine learning models for fraud for many, many years. This is very, very normal. But historically, fraud detection tools has been used to reduce fraud for the bank. What we have seen now is the consumers themselves are increasingly more impacted by scams and frauds, where the banks are relatively less, but the consumer who is feeling the brunt of it. So we believe that if we can use the power of AI to really address this and really look for patterns, how we can protect the clients better and give him or her the tools or the nudges which does not help him or her to fall prey for those scams, that will be a huge help. So for us, these are the two use cases which we are actively working on and we feel very, very excited about for the future.
Great, and just before we get Geraldine's answer, please guys use the QR code on the screen if you'd like to enter some questions. Geraldine.
Yeah, I almost feel like we're a tech team, but we're in the same space of having the ecosystem data. So I'll just touch upon the fraud detection and the enhancing piece. While we do have anomaly detections with structured data, I think with the introduction of Gen AI, it has also introduced the unstructured data form. So you have document scans, images, etc., that you can actually include into your analysis as well. And this inclusion of extra data actually gives you other forms of detection signals, if I may say. I'll double click on this other part on personalization as well. Yes, there is the ecosystem data that we use for a lot of personalization, but I think it's also about knowing a full view about the profile in also delivering the forms. What I mean by that is the text, the images. For example, I don't know, I'm just assuming Kevin has grown-up kids and likes to go traveling. And an image to him on the travel in Europe or somewhere could be more suitable for him than something with a pet, for example. I'm making assumptions here.
It's a good guess.
So, yeah, I'm a statistician profiler at work here. So in any case, so image generations like that are knowledge through the data that we have in creating some of these generative images. And the text as well could be very in line with how he likes to be described or how he likes to be addressed in those emails that we send to him. So I'm just taking it further from where Dwai was talking about.
Yeah, I might add, from maybe just simplifying the discussion, right? There are a lot of different use cases. Highest on the priority are the various obvious ones that improve cost efficiency, right? The bots, the voice bots are the ones that are very powerful right now. Voice bots are able to replace human collectors, human telemarketers at a very high efficiency. We have tried that earlier this year, made more than 500,000 collection calls, and the success rate is as good as a human. The promise to pay is equally good, and they can all, mass call out at the same prime time. So it's very, very effective. You can save a couple of tens, if not hundreds of head counts. But I agree with what Dwight said about revenue generation. Again, go back to my first point about commercialization, right? Because a lot of this AI, a lot of the talk about it, right, is very costly, right? So there's investment in people, investment in sandboxes. We try a lot of things, but the board is asking, where's the payback? When are we getting the commercialization? So I think the point about revenue, not enough actually has been done in terms of trying to augment our humans, our RMs, right? Basically, if you look at the high value added parts of financial services, it's still whether it's in the wealth management area or it's the corporate banking, the commercial banking area, RMs have a RM to client ratio. Why is that ratio still bound by the modern confines of their time, right? We have at Leong Bank a vision of what we call Jarvis in Iron Man, that we could make our RMs like Tony Stark one day, hopefully, right? Well, at least get them a lot more efficient, double up their productivity. So efficiency and productivity, in my view, is two sides of the same coin, but there's a lot more focus on the productivity part of it. How do we actually improve and uplift our RM's productivity, because if you can deliver, I mean, again, through data, through different interaction points, uplift the satisfaction, be able to derive real revenue, real points of satisfaction from the customer. I don't see a big scale, in terms of application of this right now.
So I think we often talk about productivity and process improvements, cost reduction. If your own customers were sat here today, and they said, well, what value does that give me as a customer? How would you explain it to them? And then linking that to perhaps a question from the audience is, when you've got immature models or models that are developing, how do you manage that potential impact on the customer? I don't know if anyone wants to go first on this one.
Sure, I can start off. AI is a tool. The bank remains equally responsible for it. It doesn't matter whether the output is through an AI or the output is through a bank tool. And I think some of you would have seen the MAS FEAT principles which had come out, which makes it very, very clear that whether you're using your own model or whether you're using somebody else's model, you are equally accountable. And I think that's something that sometimes we miss in the popular commentary, that the AI can help you do a lot of things, but that does not take away in any way the governance responsibility that exists on you. So I feel that in some way, I think Geraldine mentioned it earlier about risk. And I think it's really important that as an organization, you can only truly tap into the power of AI if you have the governance set up. If you don't, then honestly, you can't get much out of it because it will forever stay as a pilot. So you need to have the industry level or the industry strength ability in knowing how to detect biases. How do you make sure that the model is not hallucinating? And what type of guardrails have you set around it from a security point of view, from a data governance point of view, data quality point of view, to ensure that you can tap into it. Now, one of the other things that we have seen today is that many of these models, as you said, is immature. So you have to take a step-by-step approach. For us, for many of this model output, we still have a human layer there. So it's essentially the co-pilot approach. You don't really expose the full output to the client. It goes to a human being who looks at it before it goes. And I feel personally that it might stay like this for some time before you get enough confidence in this.
So maybe I'll share experience when we launched our FAQ chatbot within the website of the bank. We put it through several months of testing with the human agents in the middle of the loop, so probably like what Kevin has done in his organization as well. And undergo 700 test cases internally, ranging from compliance, risk, etc. Before we were, and this is only for frequently asked questions, so FAQs. So the reason for that is there is no personal information that goes in there, and the risk will be mitigated. Based on that, we were then able to put out in the chatbot into the website, and now we're still collecting some of this, disgruntled comments on the website. No one knows that there's no human behind it. There is a chatbot, but at least it tells us, okay, what's not working, what's working, etc. And we're refining constantly with the comments that we are getting from these customers as well. So I think this is an iterative process. It's never going to be 100% on day one. Like what Calvin said as well, it's always comparatively to the humans. Humans can also make mistakes when answering those FAQs. Yeah.
I would add that, to your original question, how do we apply when the models are not yet mature and customers do detect failures or, things are not as good as it should be. But even coming back to my example of using voice bots to collect money from customers, we actually, through the hundreds of thousands of calls that we made, there are quite a number of instances when we learned the client very quickly detected that this is not a human speaking to me. So, and the question is, are you a machine? Are you a robot, right? And through experience, we actually trained the bot to say, yes, I'm a robot trained by Hong Leong Bank. And in the next breath, immediately continue that conversation. So I think honesty is a very important part of how we implement, because it's not yet perfect. Having a level of honesty with the customers and applying it in areas where it is not seen as offensive to customers, to the point made earlier that we need to take responsibility. It's not the machine did it, right? But we take responsibility. So still in a very careful, sincere, and honest manner, when we have to be able to derive these benefits. And through some ways, whether it's the personalization or customization, certain benefits are still yet to be fully seen accruing to the customer.
And as an extension of that, the audience are particularly interested in the governance around that. So whether it's the appropriateness or the accuracy of some of these models, but also the cybersecurity implementation. So from dealing with B&M, MAS, how do you put solid governance around that? How do you give yourselves and your customers confidence that those sorts of things can be tracked, tested, and protected against?
Maybe I respond to that very quickly first. I think even a couple of years ago when this came up already, at the regulatory level, at the board level, it's really established that it is a board level governance, right? That a lot of these tools, right, this machine learning or self-learning, and if it's actually a supervised level of work, then the bank takes responsibility. When it gets into unsupervised learning, there still has to be a level of guardrails, as said, right? The responsibility has always to be with the board and with the management that these decisions are made, and you have to be ultimately accountable, which is one of the things that it puts a lot of challenges when we work with vendors, right, who have a lot of these models, they have a lot of data. If we're not part of an ecosystem like some of these other colleagues here on the table are, but even if they were, I'm not sure if they can fully, right, free flow of data between the two different parts of a group, right, that the banking regulation requires that the bank is responsible, right? So the governance, there's no other way out. You have to know. You can't say, the black box did it, and I can't explain. That's not acceptable, simply.
I think just to add on from the third-party data that you were mentioning, I think there's an additional responsibility on our part to understand how the data from our partners are being collected, how it's being processed as well, before it's being used. I think I would just want to include the point that we have model risk validation in all our teams. This has now expanded, the scope and the framework has to expand to include even cybersecurity as well, and furthermore components.
Yeah, I think you covered most of it, but maybe just to add some more color to it. So number one, when it comes to governance, as you mentioned, it's a board level responsibility. So before you start any AI implementation, you need to be clear that which risk committee is responsible for it, right? So you need to set that up. But number two, models are of various nature. There are models where you have relatively less impact to either the client or to any real outcome, and you can take more risk there. And there are models which are very risky, where you need to have a lot of governance and a lot of guardrails around it. And again, going back to the FEET principles, the 4 principles, which is number 1, fairness, number 2, ethics, number 3, accountability, and number 4, transparency. So you need to be clear that you are taking all of these 4 at the same time. And you'll find out in all of these cases, sometimes one might become very difficult, in which case you will have to be very, very careful on them. Coming to cybersecurity, clearly you mentioned about ecosystem, and there you need to have the ability to tokenize data, and you need to do a tokenization of data at scale, which honestly some organizations may find difficult to do. And you will only be able to really take value out of this ecosystem data if you are able to tokenize and detokenize at scale.
It made sense. There's some questions around for people starting off in AI, organizations and even established organizations who are now beginning their AI journey. What advice would you have for them from your experience, both personally and through your organizations?
I'll go back to, and maybe please add in, I'll go back to where I started first. I think AI is a tool. You need to have a business outcome or a specific client outcome that you are going for. So going back to the value prism, it's really important that you do that first before you start any work on AI. That's number 1. Number 2, I think that common saying about think big, start small, and scale fast is really important when it comes to AI. Because starting small is very easy. But if you don't think big and scale fast, there is no point. So you need to have the governance, you need to have the risk management, you need to have the committee set up, even as you are starting the pilot, because otherwise there will be no real space to doing it. And finally, I will say it's still very important to do the pilots, because sometimes you will find out if you don't do the pilot, you never learn. So the first 3 pilots possibly will not work. But if you have not done it, you will not learn anyway. So having that right balance between doing the pilots but not going crazy about it is quite important.
So I do echo with Dwaipayan's on his points. I think having the board buy-in is also very important. Trickling down to the senior management and having a dedicated steer co for that as well. As a newcomer, my advice is look around the industry, look around the ecosystem, because I think more and more tools are coming up that would avoid you from having to build everything from scratch as well. Not necessarily, like his value prism, what is necessary to be built versus buy. I think that framework internally has to be really carved out properly before you move into the strategy of building your AI tools.
Where we are getting started right now is talking to a lot of people, speaking to experts. Here, for example, at Singapore FinTech Festival is one such avenue where we brought quite a number of our engineers here to talk to all the vendors, talk to all the practitioners. But we are also looking at educating the senior management and the board. Because even as we try all this stuff, right, you will come to a point that says the board is responsible. So they have to tick the box and says they're going to be agreeable to this. So I think it's not just at the technical level, at the management level. I heard that one of the local banks here have sent the entire board to China, right, to have their board understand what's the scale of AI and how that's being implemented in a very advanced country like in China. So we are trying to do the same. I think we have to learn, we have to talk to our people. But maybe one final caveat is that there's so many new things. I mean, every 3 months we look at it. Every month we look at it, something new is coming, something better, a new competition is coming. So to lock into a particular platform, or lock into a particular, say, vendor or solution is quite risky right now. So you want to keep your bets open, right? Try different things, but make sure that you're able to evolve and you're not locked down to one particular solution at this point.
And finally, Dwight, you talked about the hype scale. Where are you? Are you on the more pessimistic, the more realistic? Are you on the far end?
We're right in the middle. I think
Right.
we're not on the hype. We're saying that there's a hype. No, we think AI is definitely real. It is here. We already have seen the benefits, right? But on the other hand, it could get very stale, because if a bank with anything less than 10 million customers, we applied some of the use cases, it was not really exciting. We went to China to look at what it's a very big thing there now. They're talking about AICC, AI call center. I looked at a couple of use cases they were doing. I said, this stuff that we can do already in Southeast Asia. But the difference is they have 100 million customers. And they're doing that multiplied by the 100 million customers. So the cost efficiency they get is very different. So I think between that hype, because when you're in a market that's such scale, and you apply something that's very simplistic, and very effective, immediately you get the benefit. But in a relatively smaller market, I think we have to think about the revenue part. I like what Dwight said about where's the revenue generation, right? If you can identify where the big revenues are, even at 20% uplift, 30% uplift on the productivity of your most biggest revenue generation area will be a big uplift.
And finally, is it time to rebrand AI? Have we overused the word? And any ideas for the rebrand?
Give us a name.
I don't think there's a problem with the name. I think AI is just fine. It's about how we go about it. Is, I mean, a descriptive, very, 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 very neutral description of what the reality is, right? So I don't think it's a problem with the term.
Great.
I do think that there should be human-enabled AI in there.
Nice.
Hi.
And on that note, we need to say goodbye to our panelists. Dwight, Geraldine, Kevin, thank you so much for your insights, and thank you to our audience as well. Thank you.